Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Garrett Soloway, Chief Market Strategist here. Today's date is Thursday, June 6th, 2019. So let's talk about the S&P 500 today, up fractionally on the day. I still have a max upside target of this level right here. There's a gap fill right around 285.60 or so. That's my max upside target. So we're about $2 and change away from there. Now, I will say something that's catching my eye today is the divergence between the Russell and the S&P 500. So you can see the S&P's up a little bit on the day, 1.12%. So, just a tenth of a percent or so. Look at the Russell, folks, getting hammered today, down 1.12%, in fact. So basically a difference here of 1.25%. That is a difference that, honestly, I don't remember seeing that in recent history. And the IWM, I've said it in these free videos to you guys, I've said it to our members countless times, the Russell is a leading indicator. Something is going on here, folks. And again, basically the Russell's telling you that probably these Mexican tariffs do go on Monday. It's telling you the jobs number may not be too good as well tomorrow, which again could mean the economy is weakening substantially. So we'll have to see what happens here. It's interesting because I have this kind of juxtaposition between expecting the S&P to maybe get up as high as 285.60, as I talked about, that gap fill there, plus the 50 MAs just above there. But at the same time, you have this massive divergence between the Russell and the S&P. So what the heck does that mean? And to be honest, I can't tell you. I don't know if the markets are going to run out of steam earlier than the 285.60 level on the spiders or not, but we'll have to just wait and see. The one thing I will say is that based on everything, this move is 90% done at this point. I mean, we were down at 270 and we've gone back to 283. I mean, basically that's a humongous move. So maybe not 270, but 273. We've gone over $10 on the SPY or 100 points on the S&P. So we're just looking for, two points left essentially on the spiders as a max upside. Now, as you guys know, if you guys were in the research center, we've banked tons of profits on our shorts. We went long down here. We've made some good money on some longs, and I'm actually just yesterday, I started to short a couple stocks. Now, I'm just inching back in positions, but I do see some opportunities out there on the short side for this market in select names. I'm not ready, as you guys know, to short the S&P yet because we haven't hit that target, but I will be looking to do that as well as the NASDAQ and some other things out there. I think you have to recognize that there's a lot of unknowns out there. I'm actually impressed that the market has bounced as much as it is. Last Friday, I noted to members that the sentiment on CNBC's Fast Money Crew was so bearish. It was more bearish than I've ever heard it, and it happened to be just into that Monday pivot low before this bounce. So I think that's important. I am noticing a few more bulls coming out of the woodwork, although not a ton, but that does make sentiment shift over a little bit, and again, it does allow the markets to come down just a little bit potentially. Okay, so again, we'll see what happens here. Couple stocks that I'm keeping an eye on that I think are ridiculously overbought. One of them is HSY Hershey's. Notice the time count here if you're a PPT methodology player. The time count on Hershey is ridiculous at this point. Beautiful 1, 2, 3, 4, 5, and so forth. Extended move. Look at this move up here. Then you had the pullback. Here's another time count, and I expect a pullback on Hershey in the coming days. Let's take a quick look at Apple, which has had a big bounce here. Notice Apple surged up off of this support down here. So again, look at this support. This was a beautiful level on Apple. Off of this support, where did it go? Right to the 20 moving average. Short term, that's going to be some resistance. We'll see if it can push through in the coming days. A lot will have to do with China and what goes on there, as we know that there's a lot of exposure in China. Has China been telling its citizens to not buy iPhones? Again, those are things that we'll find out in the coming quarter based on their sales numbers. Let's see what else we have. Intel's eking out a small gain. I am keeping a close eye on the FXI, folks. I do like the Chinese market. You can see we put in a little bottom here. It's interesting because while the spiders have bounced big, you've had a smaller bounce in the China market, but you are still hovering around a 75% fib retrace there. So it wouldn't shock me to see maybe, I don't know. The chart's not looking as good as it once was, so I'll more remain neutral on this. But again, you're still stuck at that 75% fib support level, so it still has that chance to bounce. Let's see what else we have here on the charts. I'm looking to buy potential pullbacks on a couple stocks out there if they start to tank again. The financials are interesting because interest rates continue to be so weak. on the 10-year, basically around 2.1. I do think interest rates get down to about the 2% level. That'll be where I start inching into some of these bank stocks. I think the bank stocks have one more leg lower. On Bank of America, I would like to see a buying opportunity around 24.60. There's a gap fill there. One more hard sell on interest rates would probably drive these things down. One more hard sell on the markets, and that would be the opportunity. Notice how Bank of America did bounce off this support. That's where it's currently bouncing. But again, look at the chart, how nasty it is now. You bounced, which is great, but you have the 20, the 200, the 50 just above current price. Those are three massive resistance points. And again, that's why I think, honestly, bank stocks have another leg down, because a lot of the bank stocks have this setup where they're into resistance off this little bounce, and there's just a ton of resistance points here. I am looking to rebuy the VXX, which is volatility, folks. I do think that I will wait until we get this jobs number tomorrow. Could I miss the trade? It's a possibility for sure, but I want to be safe and just wait on it because, again, if the jobs number causes a rally in the market and the S&P goes to that 285.60 level, the VXX is probably down another dollar, if not more. So I want to wait for that. I think that would actually be where I buy it tomorrow if it gets below 27 on a rally to that target on the S&P 500. I think that's the bottom line of this video. If we get to that S&P target, that's where I really start accumulating more and more shorts. As I said, I picked up 2 shorts yesterday, half positions on 2 different stocks. I'm not going to tell you them because they're for members, but those positions individually are primed for a pullback as opposed to the market is not quite at its maximum yet. So we'll see. As I've been talking in this video, the Russell continues lower, folks. So pretty amazing as the Russell continues to sell. We'll see if it continues to get even lower. But this divergence in the Russell is definitely alarming and should be freaking bullish investors out. I mean, again, as I said, there still could be a little bit more upside in the spiders, but, you know, it's not pretty. And by the way, oil. I mean, oil just crashing down yesterday. Today, it's kind of having more of a pause day. You did kiss a support here. There was a gap fill on this, so you can see that 10.50 level. I am a buyer on oil. My next buy level is down here at $10. If we can get a flush in the next week or so to this level, I will load the boat on oil, probably buy calls and the USO itself, maybe the UCO as well, which is a 2 times long. But that is an amazing level. The key is it has to come into it via a time factor, and that's why it needs to do it probably by next week sometime. If it doesn't do it by next week, that is off the table. All right, bottom line is you want the insight, you want the exact trades, the exact entry points, stops, targets. Get involved. Join the 7-day free trial of the Research Center. If you want options, join the options alerts. It's there for the taking, folks. I hope to see you soon.